Hey, what's up traders? This is Trader Tim from eminimind.com doing a trade recap video for the 9th of April 2020. And before we get to the intraday ES, let's take a look at the daily chart here in the S&P. Anytime we're sort of rallying after a big sell-off, you always want to look at that halfway back, and the same thing would be true after a big rally and we get a pullback, looking for how do we react at the halfway point. And this 27.92 has been a pretty popular spot to look at. And on this move up to the 27.92, there's been a lot of instances where you have what seems to be bad news coming out and then the market rallying. We've had a handful of gaps on this move up, including today. And anytime you have a gap at the end of a move, so like this trend is up right here, and then we have a gap up, that can be what's known as an exhaustive move. Today's range was also really small, which can be a sign of sort of churn or potential turning over. So we do have a lot of potential to roll over, and especially to maybe gap down on Monday. Markets close tomorrow for Good Friday. And so I do have some puts on up here. And if we do break below today's low on Monday, or if we gap down, that would be a gap worth selling at the open. What I would watch for then intraday is if we make some kind of V reversal where we get a kind of a hammer at the close of the day. I would make sure that I have my stop above that day's high. We don't, we've got a retracement like this from lows. It didn't quite tag up at its 50, but we're sitting just above its negative 23, and so it's possible to draw up the next retracement and maybe see a bounce at the 26.33. Today was a pretty tricky day. We'll get to that here in a second. But if we go higher from here, which is there's certainly a possibility, when everyone thinks the market should go one way, and then it doesn't, you end up with sort of this panic of, oh shoot, I gotta scrap my positions and get out, and you can end up with a pretty big run up. So as we look at the move down here and just trying to pick out some of the swing highs, and then you got this little high here, the high here, both of those have been taken out, and then this high up here, those are all really small swing highs, just one day. Really the most major swing high on the move down is all the way up here, and that would be a clear break of the 61.8. So Monday will be very, very helpful to give us a gauge of where we're likely to go. If we sell off or if we gap down and then have a big body trending day, something like this guy here, then I would just watch, what is the reaction, ideally at the full halfway back. If you want to pull from this swing low to high just to see what's there, you can. But anytime we're sort of resuming the trend, if the trend is down and this is the bounce, then I want to really focus on the full halfway back. If I quickly go over to the SPY to take a peek at volume, you can also see, it's a little bit clearer here, that we have strong volume on the move down, increasing volume right away on the sell-off, and then as this rally has occurred, we've had a little bit of a decline in volume, actually a pretty pronounced decline here in volume. So that's typically a sign that the rally is losing steam. Whether or not we go down and complete to the negative 23% target, is neither here nor there, even if we just come down and double bottom, or if we just come down and trade at the halfway point and then maybe kind of bounce between the two. Those are some possible scenarios. But anytime we're at a daily level like this, when I'm looking at the intraday chart, it's worth noting that bigger level. The VIX has slumped off quite a bit this week, or just continued its decline down to the low 40s. Um, it has a way to go to break this swing low from back on the 3rd, but certainly lower than we've seen it and consistently heading in that direction. So let's go over to the ES today. Pretty tricky day, I thought, and even looking back on the day now, yeah, a tough day. And the reason for that is because you end up with this tight range. I say tight, it was still, what, 55 points or so, but smaller than we've seen, and you had a break of a halfway back long, followed by a break of a halfway back short. And anytime you get two breaks like that, a long breaks and a short breaks, doesn't matter which order, um, anything in that middle of that range, you want to stay out of that range. So basically, you want to draw a box from the top of the range to the bottom of the range and be looking at, buying lows or selling highs. You don't want to be trading in the middle of the range. But up until you had that double break, which was maybe an hour and change into the day, uh, it wasn't very clear on the direction. So we opened up here and moved higher. We had gapped up, and this is that halfway back, full halfway back short. So knowing that, that daily level, we were basically right on top of it, I'm coming in and looking for short opportunities. But the breadth and the advanced decline line this morning were super bullish. And so, you have this conflicting signals, and that was the case pretty much most of the morning. So we opened up the first 30 minutes, had a decent little rally. There was a really nice little setup up here, but it occurred right at the top of the hour. We had a consumer sentiment. That's what it was, right at the top of the hour. And this guy set up right as that was coming out. Then you had Jerome Powell speaking as well. And so I don't like to put on a trade right as a number's coming out. So didn't end up taking that guy there. Let's go zoom out a little bit. So this is the halfway back for the day. You can see from lows of the morning to highs in the morning. And then down here, I just marked the low of the first 30 minutes. And we came down to that halfway back, and then we bounced and we stopped just about at the short. So then, you kind of have to pass on the long because you've got both setups in play. There are certain cases where I would, just go for it, but today was not one of them. So the long trades, the short trades, you kind of bounce back and forth, and you're not really clear on the direction. Then we do break the halfway back long. You say, okay, great. Well, maybe we'll start trending lower. And we do trend lower, but we only get to sort of just off lows of the day. And it was at that point that we got a low tick here at low price. And we had a little double bottom, which is a nice little set. Not a true double bottom, but pretty close here. And the low tick of the day broke the swing high. So that 71.25 was a great long setup. But keep in mind, that was counter trend to the daily short. So if you think of it this way, the breadth and the advanced decline line were very bullish. The current trend is up, so that's 2 for the bull column. This is a long setup, so that's 3 for the bull column. And then the bear column, you've got us sitting at a daily short. So, 3 to 1, it's like, well, this is a pretty solid setup regardless of context. So let's go for it. The next, let's say, when we're at a daily level, you'll start to see if the daily trades, then you'll get a setup on the 15, and then you'll get, more 15-minute pullback. So the next, or the 15-minute, just like we look at the 15-minute chart and then come over to the 512 to place an entry. If you look at the daily chart and say, okay, here's the daily halfway back, let's come to the 15-minute chart to place an entry. That ended up being like this, from highs to lows, and lined up really nice with that daily, but it failed. And so you say, that's a little bit odd. Now that halfway back if I draw it up on the 512, looked like this. We hadn't traded it when this long setup traded. So you got to say, okay, well, we're at lows. If we did have a little bit of a bottoming tail here, so that's kind of a good sign that there were some buyers early in the day. We had the low ticket lows, a super strong breath. And so if we can at least get from lows to the halfway point, that's a 71 to an 86. That's a pretty sizable move, and that would make for a great trade. And then it ended up ripping pretty strongly to and through that level. And so if you just come through and trail your stop, 2 ticks below each candle every time a candle breaks out. So if I zoom in, if you can see here, these 3 candles don't make a new high. So you want to just leave your stop below the first candle. You don't want to tighten it up under this guy because it didn't make a new high. So just kind of leave it a couple ticks below the first candle, then you make a new high here, you can bring it up, and a lot of these candles are forming rather quickly, so you really don't have much time to get it under each candle, but you just kind of do your best and kind of hover your cursor. If you've got like the active trader, you can just drag your line right on the chart and it'll move your dome price on your dome for you. But same thing over here. See how these highs are all the same? So that means you just leave your stop below that first candle, kind of let it consolidate, and then once it makes a new high, then you move it over and bring it up. So you just do that all the way up, and that was a pretty sizable move. And then once you break the halfway back short, now you've got a failure of a long, you've got a failure of a short, and there's really nothing to do in the middle. So you kind of have to just wait it out. And if it gets to, that 2 hours mark after the open, then you just kind of have to shut it down. We didn't really make it up to highs for another short opportunity. And by the time we were down kind of towards lows again, it was getting close to that 2 hour mark over here, and it was pretty messy in the middle. So as a rule of thumb, when you break a long and then you break a short back to back, do not trade in the middle of that range. If you are a trending day, you're going to have long trading and then another long trading. But if you are in a period of consolidation, it may just be the first 2 hours of the day or even like the first 30 or 40 minutes of the day that we are range bound. But if you burn all your bullets through that, then when you do start trending, you don't have any trades that you're able to take because you just burn your matches and took a couple stop outs and you're out of bullets. So let's see. I think that's everything I had for today. So yeah, just the one long. I did yesterday. We did the master class on swing trading, and if that interests you, you can go to eminimind.com, scroll down to the bottom, and you can get the class and all of the materials there if you're interested in that. That's a premium content, and I hope everyone has a good Friday tomorrow and a good Easter, and we'll talk to you all next week.